Hi everyone and welcome to the weekly update with me, which is market analyst at Hantec Markets. Each week I take through the key events I believe will be driving your investments in the coming days. Now, obviously this non-farm payrolls report was the key event of last week. It changed the dollar trajectory in terms of the selling pressure that had been coming through the dollar. We had a bit of a rally on the dollar index, as you can see on the chart here. Exactly how much of a rally we're going to see on the dollar, I think, will probably play out throughout this week and then react to the US inflation data on Friday, because ultimately the Fed is looking for inflation. It got jobs growth last week. It didn't really get any inflation trends. You saw average hourly earnings, which are flat at 2.5%. The Fed really does need to see inflation coming through, so that's why the market will be focusing on CPI this Friday, see if that can start to pick up. If it does, you might start to see the dollar rallying quite more significantly, because what we have seen on Monday is that the dollar has started to sort of tail off a little bit of uncertainty in terms of exactly whether the rally will continue. You saw Treasury yields, which picked up on Friday, not massively, just back to levels of which they've been previously, so it's not really a massively driven move that's going to see the dollar sort of soaring higher from this sort of level without any further influence, I think, and that will be sort of coming potentially from the inflation data if that starts to pick up. But at the moment the dollar is not necessarily going to rally exceptionally hard, I don't think, this week. So that inflation data is the big focus of the week. Now, in terms of Forex markets, we've got euro dollar, which just corrected a little bit on Friday, but still continues to hold on to the key breakout levels 16.14 and 17.11. Those are big support levels. Those are holding. You had a little bit of a correction, but ultimately I think it's probably going to be bought into, because I think we're going to see further upside in that euro, probably towards 120 and possibly even beyond that. But at the moment, I think you've got to continue to play little corrections as a chance to buy on euro. Sterling is a little bit of a less strong story. It has broken a key uptrend, but again, it's sort of held on to support with sort of 130 to 130.50 as a support band holding. If that breaks the downside, we're looking at 29.30 and then possibly back towards 28 area. But for now, at the moment, we're holding on to the psychological 130 level. The longer that continues, I think the more support cable will continue to find, and you could see the rally starting to sort of kick in once more. Now, it's interesting that what we are seeing is dollar yen starting to break down, break its uptrend, break its downtrend, and starting to move sideways. Now, it could form a little bit of a base pattern if it moves above 111 figure. But again, it's sort of at the moment just moving sideways. Really, it's in a consolidation. So the sort of theme we're getting across these Forex majors is that the markets are at sort of crossroads. Really, is this the start of a dollar bull run, or is it just a pause for breath that's going to give traders another chance to get in and sell the dollar? So it'll be very interesting to see how these all play out. And I think inflation could be key this week. In terms of your equity markets, again, currencies have been a key factor here. You've had a strong earnings season from the States and also Europe, which have helped to support markets, certainly, but the currency has been a key factor. The weak dollar in conjunction with strong earnings season has meant Wall Street strongly outperforming and pushing higher. Key all-time highs seen on a daily basis on the Dow. S&P 500, though, is not as strong, and certainly if you look on the technicals, could be showing signs of a bit of possibility of a topping out. 2,460 is the key level to look out for there. But what we have seen is sterling weakness on Friday, pulling, or Thursday and Friday, pulling the FTSE 100 higher. You saw the euro weakness on Friday, the DAX rallied. But is the euro going to continue to correct lower, or is it going to rally again? If the euro starts to find support, which it looks to be doing on today, currently 36 up on the day. If it finds support and pulls higher, then the DAX will be under pressure. What we're seeing today, the DAX falling away again. So that 12,300 level on the DAX, there or thereabouts, is a good resistance area. 12,300, 12,340, 12,360. That sort of area seems to be a resistance on the DAX. Now, in terms of your commodity prices, again, we saw the gold price breaking down on Friday with that dollar strength. So this dollar move has been key across the markets. Now, we saw 1260 being supported for gold previously. It's now sort of back into that mid-range area, 1240 to 1260. That sort of is a middle ground area. I think that's sort of fairly neutral for gold, and it continues to sort of, if that remains intact, I think you've got to be fairly neutral on gold. Breaking to the downside, you're turning negative on gold. Above 1260 on a consistent basis, turning more positive for a test of 1300 again. So it is fairly sort of pivotal, this area. The oil price seems to be driven more by supply impact. You had a degree of support coming in on Friday with that Baker Hughes report, where the rig count fell by one rig. But what we have seen is this continued sort of concern that OPEC production continues to push higher, and compliance is a real issue. So there is a meeting with the OPEC and non-OPEC this week, and it'll be interesting to see what comes out of that. But certainly the compliance with the OPEC production cuts, continued increases in US production as well, doesn't necessarily help the oil price going forward. So for the rest of this week, well, again, not a massive amount. What we have is sort of the jolts on US jolts, job openings on Tuesday. We've got a little bit of Chinese data. We've got the trade balance on Tuesday, and inflation on Wednesday could be a risk driver there. That would be interesting. But other than that, the RBNZ, which the Bank of New Zealand not expected to move on rates at all, and it's arguably going to be fairly dovish as well. So that's why we're seeing the Kiwi, which is underperforming today and could continue to underperform if that remains the case. So we're looking towards then inflation on Friday being the big driver, not any expectation of any move actually on US inflation data. So if that increases in any way at all, or comes in better than expected, then you could well see a dollar rally. But I think the market is not really anticipating inflation as any real note in this state. So I wish you good luck in your trading today, and I will speak to you again next time. Thank you.